Richard Morris is the head of research at joins us out of Zurich this morning. Richard, good to see you. Well, you've got a dollar-yen chart for us. Try and break through this short term. What do you see over a longer term frame?
Yeah, this is part of the reason I sent you a weekly chart, Jeff, and good to see you. It's probably something that I think Martin will probably have a bit of a hard swallow on for the yen. What we look like, we've actually started a five-leg patterning on the downside. We've done the first, second, third. We're now in correctional fourth. It does tie up with the GAN scenario as well. I would expect the market to probably get up in the yen dollar, probably up to the 118, 102.15 level, just to retest this market to see whether the upside is able to be taken. I don't believe it is, and actually going forward I'd expect we'd look for an extended fifth. I don't profess to be an Elliott Wavis, but it's pretty clear because it's come off a five-leg down and then a three-leg up movement. So I think going ahead, the US dollar is probably going to face a lot of problems. The actual turn for the yen is indicated some point around the end of March, beginning of April, and then we'll start to see the downside again being taken, and where the extended fifth measures to goes down to around the 80 level, which is near the record lows of 79.
Let's talk about some support levels for the S&P 500 in this latest move. Where do you think the important numbers are on the downside and potentially on the upside if we get a bounce?
Yeah, I mean, I wrote this yesterday afternoon for you before we got the big slide through the 740 level. 740 is very, very critical. We did the first cross point on the GAN back up at just above the 1,000 level, which helped the acceleration to the downside, and we've now come to the next part of it, which was at 740 on the weeklies. We need to hold on to 740 for a weekly close for this week and for next week, and if we could do that, then the market's got the potential to rally back up to the 832 level. It looks to me now as very much it's going to be a very big struggle. If it fails, and the downside, look for 687 is probably where the market will stop, at 687, 673. If it takes that level and goes through it, then we're really well open down to the 550 level. I know it sounds a long way down, but I was talking to Guy only about 2 weeks ago, and we were talking about the potential for a big sell-off in this market from the 832 level. We've already seen that 15 to 20% is what we were looking for. We're pretty well there. I'd hope the market will try and stabilise around these lows. We are looking like we're going to try and put a turn in today, tomorrow, and try and make a temporary rally, which hopefully by Friday will get us back to that 740 level.
Richard, thank you very much for your time, Sir. Richard Morris, head of research, calls on the market.